What's up, crypto fam? Welcome back to Bitcoin Bulletin, your go-to source for all things Bitcoin. First up, are you ready for this? Institutions, including giants like Strategy and Metaplanet, have now collectively snapped up a staggering 12.3% of the entire Bitcoin supply. This isn't just a blip on the radar. It's a seismic shift in ownership, with early holders handing over the reins to these massive financial players. We're diving deep into what this means for the future of Bitcoin and why this trend is only expected to accelerate, so buckle up. Now, hold on to your hats because we're shifting gears to explore a bold new frontier in corporate treasury strategies. While Michael Saylor's Strategy, Inc., has championed Bitcoin as the ultimate treasury asset, a compelling argument is emerging that Solana might actually outperform BTC in this critical role. Multicoin Capital's Kyle Samani is making waves with his analysis, suggesting that Solana's native properties could make it a superior choice for digital asset treasuries. We'll break down exactly why this is the case and what it means for companies looking to diversify their reserves. All right, let's talk price action. Bitcoin is flirting with some serious numbers, and traders are on high alert. Popular analyst Skew is saying it's time to pay attention as BTC hovers around the $115,000 mark, with key indicators suggesting a bullish weekly close is crucial. We'll dissect the technicals, explore the market sentiment, and see if Bitcoin is indeed on the cusp of another major move upwards. The charts don't lie, and right now, they're telling a very interesting story. And finally, we've got insights from a true OG. BitMEX co-founder Arthur Hayes is weighing in, and his prediction is huge. Hayes believes the current crypto bull market isn't just alive and well. It's set to extend well into 2026, fueled by global monetary trends and extensive money printing. He's breaking down why governments are just getting started with expansion and how this liquidity flood could supercharge Bitcoin and the entire crypto space. You won't want to miss this expert take. Stick around and make sure you're subscribed and have that notification bell on. Institutions are buying Bitcoin hand over fist, are you? Get this, major players like Strategy and Metaplanet aren't just dabbling in Bitcoin anymore. They've collectively gobbled up a massive 12.3% of the total Bitcoin supply. This isn't just a statistic. It's a clear signal that the digital gold rush is on, and institutions are leading the charge. We're seeing a significant rotation from early retail investors to these financial giants, a trend that analysts predict will only intensify. This massive accumulation by institutional entities suggests a growing conviction in Bitcoin's long-term value proposition as a store of value and a hedge against traditional market volatility. The implications for Bitcoin's price stability and its integration into the global financial system are profound, as this sustained demand could potentially create new price floors and accelerate mainstream adoption. The crypto community is buzzing about this shift, with discussions ranging from the potential impact on Bitcoin's scarcity to the future dynamics of market control. Many are asking if this institutional embrace is a sign of true maturity for the asset class or simply a prelude to further price discovery. Will this trend continue, and what does it mean for the average investor? But what if there's a new challenger emerging in the treasury space? Stay tuned as we explore how Solana might be poised to outperform Bitcoin for corporate treasuries. Forget Bitcoin, Solana could be the new king of corporate treasuries. We all know Michael Saylor and Strategy, Inc., have been pioneers in using Bitcoin for corporate treasuries, but a new narrative is taking hold. Multicoin Capital's managing partner, Kyle Samani, is making a bold case for Solana, arguing in his September 11, 2025 blog post, creating the world's leading Solana treasury company, that Sol's native properties make it a superior choice for digital asset treasuries. This isn't just a theoretical discussion. Forward Industries, backed by heavy hitters like Multicoin Capital, Jump Crypto, and Galaxy, has raised a whopping $1.65 billion to build the world's premier Solana treasury, aiming to maximize SOL per share for investors. Samani's core argument hinges on yield generation, a crucial factor often missing in Bitcoin's treasury strategy. Unlike Bitcoin, which produces no intrinsic yield and relies on external, riskier markets for income, Solana can natively generate real yield through staking rewards and MEV, maximal extractable value. As of September 2025, Sol stakers are seeing average annual yields around 8.05%, a stark contrast to Bitcoin's zero real yield. This native income stream allows companies like Forward Industries to service preferred dividends and other financial obligations without liquidating their core holdings, creating a more sustainable and potentially more profitable treasury model. Samani emphasizes that this yield advantage allows a Sol DAT company to service obligations in a way that BTC DATs simply cannot, potentially leading to compounding growth in Sol per share and enhancing the appeal of convertible structures. The crypto world is abuzz with this potential paradigm shift. While Bitcoin remains the established digital gold, the discussion is now whether Solana could become the digital farmland, productive and income-generating. However, critics point out Solana's relative youth, lack of a fixed monetary policy, and less decentralized nature compared to Bitcoin and Ethereum. The first-mover advantage of Bitcoin and Ethereum is also a significant factor that cannot be ignored. But is it all about treasury strategies? Some traders are laser-focused on Bitcoin's immediate price action, and the signals are getting louder. Bitcoin traders, get ready for $115K, is a surge imminent. Bitcoin is heating up, and traders are paying close attention as it dances around the $115,000 mark ahead of a critical macroeconomic week. Popular analyst Skew has flagged significant buying interest just below this key level, signaling that it's time to pay attention to Bitcoin's price movements. The crucial factor now is the weekly close. Analysts like Rekt Capital emphasize that a close above $114,000 is essential to maintain a bullish outlook and stay on track for potential new all-time highs. This focus on the weekly close comes at a pivotal moment. Markets are overwhelmingly convinced that the U.S. Federal Reserve will announce an interest rate cut next week, a move that typically boosts risk assets like Bitcoin. This anticipation, coupled with supportive U.S. macro data, has cemented expectations for a dovish turn from the Fed. Trading firm Mosaic Asset Company echoed this optimism, citing improving leading indicators, loose financial conditions, and strong market breadth as favorable for risk assets in Q4 and beyond. The confluence of these factors, technical price levels, trader sentiment, and impending macro events, suggests that Bitcoin could be on the verge of a significant upward move if key resistance levels are broken. This price action is drawing significant attention, with many wondering if Bitcoin is about to break out and solidify its position as a major asset class. The debate is whether this is a temporary consolidation or the calm before a storm of upward momentum. The next few days are crucial for determining Bitcoin's short-term trajectory. And speaking of big moves, a legendary figure in the crypto space is predicting an even longer bull run than many expect. Get ready for Arthur Hayes' take. Arthur Hayes, the crypto bull market could rage until 2026. Prepare for some explosive predictions from BitMEX co-founder Arthur Hayes. In a recent interview, Hayes declared that the current crypto bull market has significant legs left, potentially extending well into 2026. His bold forecast is rooted in what he sees as the early stages of aggressive global monetary expansion, particularly mentioning potential spending programs under a second term for President Donald Trump. Hayes believes governments worldwide are far from done with printing money, a trend he sees as a major catalyst for liquidity flowing into both equities and cryptocurrencies. Hayes ties this monetary policy outlook to broader geopolitical shifts, suggesting that periods of global instability often prompt policymakers to increase fiscal stimulus and central bank easing to maintain stability. He even pointed to potential strains in Europe, hinting at a French default as a factor that could accelerate global money printing. While acknowledging the eventual risks of such policies, Hayes is convinced that the blow-off top of the current cycle is still on the horizon. He contrasts Bitcoin's performance against traditional assets like stocks and real estate, arguing that when viewed through the lens of currency debasement, Bitcoin's dominance is undeniable. For those frustrated by Bitcoin's recent price action, Hayes advises patience, emphasizing that the real edge comes from long-term compounding outperformance, not short-term speculation. His conclusion, coupled with an inevitable wave of money creation through the rest of the decade, the current crypto cycle could indeed stretch far beyond current expectations. This outlook has the crypto community buzzing, with many reevaluating their investment horizons. The idea of an extended bull run fueled by central bank actions is a powerful narrative that resonates with investors seeking to capitalize on the ongoing digital asset revolution. The debate is whether this monetary stimulus will be enough to sustain the crypto market's upward trajectory for years to come. That's all the top stories for today, but we're not done yet. Stick around for a lightning-fast recap and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw institutions amassing huge Bitcoin reserves, explored Solana's potential to challenge BTC in corporate treasuries, watched Bitcoin traders eye a $115 K surge, and heard Arthur Hayes predict an extended crypto bull run into 2026. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for more daily insights, and ring the notification bell so you never miss an update. Share this video with your friends and fellow crypto enthusiasts, and don't forget to follow us on all social media platforms for real-time updates. We'll see you in the next one.